This conference will now be recorded.
Fine. So before going to start the session, I would like to give clarifications on your doubts. Okay. Fine. Let me go back and let me verify. There are so many pings. There are some errors. So Amrutsan, have you cleared this issue or still you are getting error message?
Yes, still getting error message, Satya.
So roll up, or are you talking about roll up? Roll up, I will explain you. But this one, like main account missing in the transaction currency.
Yes, account number for transaction type exchange rate loss does not exist.
Okay, so do you have environment with you?
No, Satya. I tried in my office lab.
Oh, in your office system. So I will give you explanation where it is available. Okay, so that is actually, if you go to the application, so that is in the, like in general ledger setup, ledger, you need to map here realized gain, realized loss, unrealized gain, unrealized loss. If you are
Here
not mapped,
already realized gain and realized loss already account is there, but still getting there.
but unrealized gain and loss?
Yes, both are there.
So you are telling like all 4 accounts are mapped here.
Yes.
Okay, 1 second. Account number for transaction type, exchange rate, loss does not exist. Exchange rate, accounting number for transaction type.
When I tried to that realized profit, there is no error. While posting for realized loss, that time only I'm getting error.
So then the problem here, the accounts, whatever it is there, that accounts you need to verify in the ledger form. In the structure, it was not included. In either of this structure, that account should be exist. So if you go to here, it is straight away the structures are very straight away. But in real time scenario, they will enter like some different numbering. If it is not included here, system will not recognize that account number. Got it?
Yes.
So you need to verify, because this is happening in your company system, that account numbers are not configured in this brain. As I told you, whenever we are speaking, if it is stored in your brain, then only it will speak. If it is not stored in your mind, it cannot come out. In the same manner, I told you accounting structure is equal to brain. Okay.
Okay. So transaction currency, accounting and reporting currency, both three different. Then only in one main account, all three will get posted. No need to map it separate for each currency.
So first thing is, you need to verify all these accounts, and you need to map these accounts here. Okay, is it clear? First, this one, is it clear?
Yes. Yes.
In this account, the structures in the one structure should be there. Now, if you want differently for each currency wise, usually we can use this mapping. If you map it, then it will be applicable for all currencies. Now, if you want for each currency different numbers, okay, then you can have currency revaluation accounts. So each currency wise, if you want to map it, you can map it.
Okay,
clear?
got it. Clear.
So first thing is minimum setup is you need to map in the ledger setup. In the ledger setup, you need to map. This is minimum setup. This account should be created and it will be mapped in the structures. So if you want different exchange rate for different main accounts for different currencies, then you need to use this one, currency exchange rates. Okay. Okay, not this one. This one, currency evaluation. So it's clear your account, your doubts, am I right?
Yes. So suppose if you are mapping GBP here, realized gain and loss, then while posting for account, that this account only it will consider, not for whatever account we are mapped in ledger.
Yes, exactly right. This is the first priority. That is second priority.
Okay,
That
got
is
it.
company level. That is for all. This is for all. This is for each currency. Suppose I want GBP exchange rate gain or loss should be posted to different accounts. You can map this.
Okay, Satya, a connected question over here. See, if in the ledger, in the default, that's where we map it. If we give the GL accounts in the currency as well as in the main in the other screen where we have the default currency or default accounts where we give, then which one will the system will pick up? Which
First
will
priority
go?
this. First priority this one.
That means we need to define the GL accounts and the each currency wise. It's not required, right?
So the code was written like always while loop or if loop. The first condition. Okay, if it is missed, it will go for second condition. If it is missed, it will go for third condition. In case it is exist, if it is not there, it will throw error message. Now, in the first condition means it is whatever you are telling currency wise mapping. Second condition, in this case, it is second condition also written. It is in the ledger form. Now, in this case, we don't have third condition. Clear?
Yeah. Thank you.
The code was written inside like this. While loop or if loop, whatever it is, the loops they will create. The developer was written the code like this. So now initially it is verified by currency wise. If it is exist, it will pick these accounts and it will post.
Okay, got it.
Yeah. This is technical inside the coding. Fine. Any more questions in this area about? Still, I need to explain you about foreign currency relation, but doubts are cleared. Am I right to everyone?
Yes, Satya.
Yeah.
Yeah.
Yes. Fine. Next one is cost roll-up. What is this cost roll-up? This cost roll-up is more about, to be frankly, manufacturing process. But let me explain you what is this. So product information management, collapse all products, released products. So if you look at this one, item model group, if it is item model group, FIFO, LIFO, or any other one other than standard, you will not get errors. This error, roll-up cost roll-up error, this will be applicable for only for standard cost. Standard cost method. If the item is linked with standard cost method, then you will get error messages. What is this standard cost method? Next month you are going to learn. This is a like 80% logistics, 20% finance. This is a very important. Like as I told you, for finance, ledger form and accounting structure is most important. For trade and logistics or SCM, supply chain management or trade and logistics, this form is most important. So I will compare this with the human being, heart of the application. This is heart of the application. Okay, if you are any human being can live can live if the heart is working. If it is not working, if this heart is failed, the human is dead. Okay, in the same manner, this is most important. Now in this you are going to learn more than 1 hour, 1.5 hour, 2 hours later, not now. In this there are so many models: LIFO, FIFO, LIFO date, weighted average date, standard cost, moving average. In this, if it is the method is standard cost method, it is a standard cost method, then you will get this kind of roll-up errors. Cost roll-up error you will get. If you are getting that one, what is the solution means for standard cost? Then you need to go to manage costs tab, and set up area page, item price. You need to map the pending prices from here. You need to click new, and you need to select the costing version, and you need to enter the site, and you need to enter the price. Some price you need to enter. Then you need to click on activate. If you click on one, you need to select the version, costing version, and site, and amount, the price, purchase price, whatever the price you want, you can enter, and you can post like activate pending price. You need to click on activate. So I'm not activating. If you activate, automatically what happens here, price will be shown. This is standard cost price. If you enter this one, the error messages will be removed. You will not get that error messages. Okay, so what is this standard cost meaning? Suppose item I am purchasing at the rate of 100 rupees one time. I'm purchasing one time 105. I'm purchasing 92, and I'm purchasing 115. I'm purchasing at the rate of 125. So I don't know, the prices keep on changing. Now I'm making like one standard cost price for this 2 months, 3 months. I want to make it 102 is standard cost. And I'm purchasing sometimes lesser price, sometimes I'm purchasing a higher price. The differences should be posted to different account. Always the cost price should be posted 102 only, the fixed cost price. That is, indirectly it is fixed price. Standard cost method means fixed price. You are making fixed price for this item. Suppose you are purchasing at the rate of 115, then 13 rupees is a loss. It will be posted to 13 rupees loss. If you are purchasing at the rate of 92, then it is $10 or 10 rupees, whatever it is there, that is loss. So the differences will be posted to different account. Now let me go back, duplicate. If in case if you are using standard cost method, then if you go to inventory management, collapse all, setup, posting. In this, the purchase transactions are hitting these accounts. These two we should know. Cost of material invoice account, data 2, vendor account credit, purchase expenditure for product 0 was posting. Along with these two, the standard cost variance, purchase price variance, whatever you have entered, that will be posted. So 102, whatever it is there, this will be posted to inventory account and inventory account. This is cost of material invoiced, cost of purchase material invoiced account data to vendor account credit. This will be posted 102, and the variance $10, $12, $13 will be posted to this account, and then like 115 whatever it is there, that will be posted to the vendor. Understood? Suppose you are purchasing at the rate of 115. Now inventory value will be updated 102, and purchase price variance will be posted 13, and the vendor account will be posted to 1. Got it? Always inventory value is 102. Any questions here? Are you able to follow me?
So
Yeah.
then there will be a difference in inventory taking, no?
Yeah, differences will be posted to this account. Purchase price variance. So what is the behind the screen? Why we are using this one? What is the purpose? Actually, it should be it should be the actual price, but why are you using? In manufacturing industries, we'll use it. What is the use? What is the purpose of this one? Suppose I'm producing 1,000 items, 1,000 quantity I'm producing. Okay, whenever I'm producing 1,000 quantity, I need to calculate raw material price, like suppose one item 20 rupees plus 10 rupees plus 5 rupees. It is total 35 rupees. Okay, then it is 35,000. The total amount is, if you are producing 1,000, then it will be 35,000. Okay, now while producing 1,000 quantity, 900 only good quantity, and 100 is damaged. I need to track. So then this damaged will be posted to different account. 100 damaged quantity will be posted to different accounts in the production. Production lot size variance, production price variance, production quantity variance, production substitution variance, cost change variance, inventory cost variance. All these different accounts, it will post to different accounts because of this damaged quantity. Then I can revisit, I can verify my business. What is went wrong in this quantity, 100 quantity damaged? What is the reason behind the screen? I can verify if it is posted differently, different accounts. Am I right? For that, I need standard cost price. Understood?
So
To accommodate
for all
all
the
these,
standard cost transactions, it will take directly, no?
come again.
For all the standard cost transactions, the purchase price variance or variance, what is the difference, whatever is there, so it will post directly to that account.
So if you are purchasing, then this account and this account will be posted. If you are producing,
Okay.
then here producing accounts, production
Work
module,
in progress account will be
and this accounts will be posted. Got it?
Yes, sir. Yes.
Good quantity will be posted to this accounts. Good quantity. Damaged quantity will be posted to this account. So that I
Okay.
can look at this account. It is a big amount, then I will verify. I can dig into business. I can verify my transactions. What is went wrong? Whether it is a employee negligence or machinery failure, or it is unfortunately happened something. I can verify furthermore based on if the amounts are becoming more in this accounts. Got it?
Yeah, Satya, while setting up the standard cost, obviously we should load the transportation, freight, and insurance cost as well, right, Satya?
Ah. So that is transportation charges. Also, you are going to learn this month end. I will discuss with you the transportation charges, insurance charges, all those things. I will explain you. That will include either it is method. It is not only standard cost method. Any method, any method. So whenever if you are discussing, I have explained to logistics, but I will understand this one also. Let me give me a minute. Item master. Whether I have explained or not, let me recap. This is important for you also. If you want to create an item master, the prerequisites are storage dimension group, tracking dimension group, product dimension group, item group, item model group, purchase unit, sales unit, inventory unit, and purchase price, cost price, sales price. Okay, so I will discuss with you. Then it is cost price is equal to purchase price, whatever it is difference. So one is purchase price, one is sales price. Purchase price means at the time of purchases, whatever the price is there, that is purchase price. At the time of sales, whatever the price you are entering, that is sales price. And there is one more price, cost price or inventory cost. What is this? Anyone has any idea? This is most
Yeah,
important.
this is the purchase price plus incidental expenses like freight, insurance, and minus discounts.
Purchase price plus charges minus discounts. In some places, maybe or may not be taxes.
Yeah.
In India, it will not be included. In USA, it will be included. Okay. So this is cost price. Okay. So this cost price, we'll discuss this one later. But system will calculate cost price itself. You need not to do anything. System will take care about the cost price calculations by default.
Okay. When we are getting the price variance, okay, is it the price variance the difference between the purchase price versus standard price, or a cost price versus standard price?
So there is no cost price if it is a standard cost. Standard cost means this is the purchase price, whatever it is there, because standard cost you are defining, you are overwriting with this one. Cost price you are entering manually. If it is a FIFO, LIFO weighted average, this, let me go back. Whatever the cost price calculation, if it is a FIFO, LIFO weighted average for all these things, system will calculate this one, cost price. For standard cost, you are overwriting with the calculation and you are telling like, this is my cost price. Understood?
Okay. Yeah.
So that means the difference between purchase price and actual cost price. See here, you are defining this is cost price. You are making actually through this calculation, sometimes it is getting, suppose the purchase price is 100. Purchase price is 100. In your example here, purchase price is 100 and charges is 5 rupees and discount 2 rupees. Okay, so this is actual, what is the amount? Cost price
103.
103. Now standard cost will calculate only 102. $1, whatever it is there, that will be posted to like variances, purchase price variance.
Okay. Okay. Yeah.
Okay.
Thanks.
Yeah.
Moving average also same that standard cost follow.
No, moving average, there is a slight difference between moving average and weighted average. Okay, these things I will discuss with you after 1 month. It is too early for you. Only for cost roll-up information to clarify this one, I came here. But this you will understand in depth about this one, these methods, moving
Okay,
average, the difference between weighted average and moving average, I will discuss with you next month end. Okay, it is too early to explain you, all of you. Okay, we'll discuss this one later. So I have given small inputs about this one because you are getting error messages. So if you want to work with this items with the standard cost method, simply blindly you need to come here, whatever the item it is there, you need to go to manage cost and set up item price. You need to enter the pending price tab. You need to enter the details and you need to activate. Automatically it will come here and then the error message will be gone. That's it at this point. Okay, so if you are going inside like this, I need to explain you about item model group a lot. That I will discuss with you later. Fine. Moving average, what is this moving average? Also I will discuss with you later. Fine. Any more questions?
Yeah, Satya, just can you please go back to that screen where we say we do the cost roll up?
The cost price.
Yeah, one step. Can I go to the previous screen? Yeah, if you look at this cost group, when we are setting up the standard cost, automatically this is getting picked up. Where is the source and the cost group where it will be set up?
So cost group is linked to manufacturing. Why are you looking this one? If you are you interested to learn manufacturing as well?
No, that anyhow I will come to you. I will join
Okay.
that group later, but just wanted to understand, do we need to set up this group also while setting up the standard cost, or is it independent?
For manufacturing processes, we need to map standard cost method. This one, cost groups.
Okay.
You can create this cost group. You can create these cost groups in production control. Okay, collapse all. Here you will find routes, and you can find cost groups.
Okay, right.
This will
Thank
be
you.
used cost groups. This will be used a lot in cost management. Collapse all. Here, costing sheet. In this, whenever you are creating costing sheet define, you need to map cost. It is mandatory.
Okay, right. Yeah, thank you.
Okay. There are so many links that you will understand in manufacturing, not here, to be frank.
Okay.
Even in the logistics also, I will give high level picture, but in detail it will be covered in the production module, production control.
Okay.
It's more about production, costing, cost categories and cost groups. Okay, those are linked to manufacturing process. Fine, we are completely deviating. So is it clear now? So whenever you are doing standard cost method, items with the standard cost model, then you will get errors, this kind of error message, whatever we got in the WhatsApp group. One of our colleague, one of our friend has posted like error message. Okay, cost roll up. Okay, how to do the cost roll up? So that one you need to overcome that error message, cost roll up. You need to do from here. Okay, manage cost, item price, cost. Clear?
Yeah, thanks, Satya.
Yeah.
It was me who has asked that question, in fact. Thank you.
Yeah, fine. That's good. Fine. Okay, now let us continue our regular topic. Foreign currency revaluation we are executing. Foreign currency revaluation we are learning. This all information is different. Now, in this foreign currency revaluation, last Friday I have discussed. Remember, it looks like very simple logic, but it is most important. The old logic is transaction currency is converted into accounting currency, and accounting currency is converted into reporting currency. This is the old logic. Transaction currency is converted into accounting currency, accounting currency is converted into reporting currency. This is the old logic. Now the new logic, it is a transaction currency is converted into accounting currency and transaction currency is converted into reporting currency. This is new logic. So it is looks like very simple, but to be frankly, the entire application is redesigned. Every posting, it was redesigned heavily now because of this small change. It is looks like very small change, but this will impact application a lot. So whenever we are using 8.0, suppose I'm using this application 8.0, now it is upgrading to 8.1, then there is a drastic change. The business logic is changed a lot. Business logic is changed a lot. It is not so simple like the diagram whatever I have written. It is very, very complex. The entire application in everywhere, whatever the postings are happening, everywhere they need to change the logic of the application. They have changed a lot. Okay, fine. Now let us understand foreign currency revaluation. Foreign currency revaluation. Foreign currency revaluation, AP and AR both are same. Both are same. You have already learned accounts payable module, collapse all, periodic tasks, foreign currency revaluation. This is for AP side, means for it to affect the vendor transaction and vendor ledger accounts, we need to run here. If it is
sorry to interrupt you, Satya. Can I stay back here in the screen?
okay.
Yeah. If you look at that reviewed button or reviewed field, and we have the reviewed button as well on the top side. What does it mean, and when do we use that?
Which one? Which button?
Reviewed.
Review.
After transactions, we have that section. Voucher transaction reviewed.
On the menu section, we have next to the, yeah.
One second. I think this is just a notification kind of thing. I have not used much about this one. Means it was a verification maybe. I need to verify and I'll get back to you on this one.
Okay, right.
So simply if you are clicking on reviewed, it is updating this checkbox. That's it. As of now, maybe some verification, something like it was verified and everything is fine. Something. Some.
Okay. And when you look at the financial dimension, we have some lines for posting and some lines for the none.
Yeah. I'm going to discuss that one. I'm going to discuss. It is important. Okay. So this is whenever you are running foreign currency revaluation, here look at this one. In the dimension there are three options: none, table, and posting. Okay, let us understand. It is most important. In the dimension we have three options. One is none, table, and then posting. The posting means whenever you are running foreign currency revaluation, the voucher is posting. Okay, here while doing this one, so here it is not coming dimensions, but dimensions also come into the picture. If it is dimensions available here in the vendor transaction, dimensions are available. Automatically those dimensions will be populated here. Let me verify, is there any dimensions here? No. Okay, no problem. So here the dimensions also come into the picture. Dimensions. What is these dimensions means? It will post to the dimensions as well. Just give me a minute. While posting this one, it is posting, it will take the dimensions from the transactions. In the transactions, whatever the dimensions are there, those transactions, that those dimensions will be taken and it will be processed here in the system. Means if you go here, in this, it will update with the dimensions. Like 800801600, business unit 01, department 022, business unit 02, and dimension like business dimension like 023, financial dimension. Like that, it will post. This is transactions dimension based on transactions dimensions or dimensions in the transaction. Understood? While doing foreign currency revaluation, if you want dimensions should be captured, based on the transaction dimensions. Based on the transaction dimensions means, if you go to the vendor, accounts payable, vendors, all vendors, suppose GBP2 vendor, for this we have transactions. This 1000 transaction, whatever it was posted, 1000 GBP means for $1200 US. If this 1000 transaction, the transaction has dimensions configured, whatever the dimensions are there, those dimensions will be posted to this combination also. That is posting. Clear? Whenever you are doing vendor invoice, at the time dimensions, whatever it is there, those dimensions will be considered while doing the transaction. Next one is this table means it will not take based on the transactions, it will take on the vendor account. In the vendor account, we have dimensions. It will not look at the transaction, it will look at the vendor account. In the vendor account, whatever you have mapped the dimensions, in the vendor account, whatever the dimensions are there, based on these dimensions, this foreign currency revaluation will be executed. That is table. So dimensions in the vendor account. This is, I don't want any financial dimension. Understood? Any questions here? Best practice is this one.
Good to go, Satya.
Everyone, is it clear? Not only Sundra, everyone.
Clear, Satya.
Okay, fine.
Yeah.
So while doing foreign currency revaluation, we have option to select this one. And posting profile, the posting profile, it is whatever you have mapped in the parameters that will be populated. If you want to change, you can change. See here in the posting profiles, you can create posting profiles here, setup vendor posting profiles. You can define vendor posting profiles. Whether I have explained ledger subledger concept? No, am I right?
No, not yet.
Not yet. Okay, fine. I remember. Not yet. Fine. I need to discuss with you about this one, posting profiles. So in this, you can, whatever it was created, that will be shown here automatically. If you want, you can change it. From where it is coming, GN, actually it is, there are two. Which one is selected? It is not first one. It is in the accounts payable parameters. In the accounts payable parameters. Here, ledger and sales tax tab. Whatever you have mapped posting profile, that is coming automatically here. Okay. Otherwise, if you want, you can select something. If you want to change, you can select whatever you want. Fine. So this is, anyhow, it is defaulted. You are not going to disturb, but only one-time job. But this is in real-time scenario. Every time business users, they need to concentrate on posting option. This is a best practice. Next one is in this consider date and rate of data rate. Consider date means transactions till this date, it will be considered. All the transactions till this date, it will be considered. Date of rate means that day, whatever the exchange rate is there, that rate it will be considered. This is for exchange rate consideration. This is for transactions to be considered. Okay, standard cost method. And invoice date means, suppose minimum means, if it is minimum means, if it is only profit, I mean to say decrease, then only it will be processed. If it is maximum, it will not calculate. Understood? But usually we'll use standard cost method only, standard method. Next, invoice date means, suppose, if you remember, not this one. So suppose this is on this one, I want the original rate. I want this original rate. Then if you select invoice date, it will consider this exchange. Understood? In anyone is expert in SAP in this group?
Yeah.
So in SAP, next day of the financial year, it will be reversed. So 30th, see on 31st March, what is the exchange rate difference? 30, am I right? 1.1, 1.20. There is a difference 30. That 30 I don't want to be kept in the this month. I want to do the reversal on 1st of April. 1st of April. If I want to do it, then you can use invoice date. Then it will not wait for reversing. See, in general, this is reversing. This is reversing whenever you are executing next time. Am I right?
Correct. Yeah.
That reversal, if we want in the next day of the financial year, next day of the next day of the period, then you can run this process. Invoice.
That minimum means, once again, can you explain?
It is minimum means only like decrease the prices I want to increase. Like here, sometimes increasing, sometimes decreasing. Am I right? See, it is increased from here to here. Then it will not consider at all. So it was decreased. Then only I want to run this. It should execute. It should affect. It should affect here only. Suppose here, like take the example, this is 1.21. It will not consider. Usually we don't use it. Maybe in some countries they want only if it is a only specific like change in the decreasing the value of the like exchange rate. Then all I want, then we can use it. Only one adjustments will be posted, either plus or minus, vice versa. Understood?
Okay.
If it is increased, it will not affect. Only decreasing I want. That is, I don't think so we'll use it in regular as a best practice. Maybe in some other countries, maybe some as per the government rules it may have. I don't know. I don't know the business case when in which situation they will use it, but I don't know like in the functionality how it works means if it is decreased then all it will affect. If it is increasing it will not affect. Got it?
Yeah, yes.
Fine. So but best practice is this one, standard cost. So if you map standard cost and you have executed on 31st March, now I want on April 1st original cost. Then we can map here. You can change it to invoice date, and you can make it on 1st of April. Then it will be reverse the transactions invoice date. Previously gain or loss whatever it was happened, that will be reversed on this day. Understood? So here in this case, in the standard cost method, it is reversing next month end, am I right?
This is Sunil. Hello.
Yeah.
So I just have a doubt here.
Hmm.
When we do in general voucher, there is an option of when I want to reverse the, I can put an option of reversal and do it, right? Similarly, can't I do it here? There's no option of reversing that whatever I have worked. Is there a date I can fix where I can reverse on that particular date?
Actually, that reversal, why we are doing for payable entries or provisional entries. That reversal is in general ledger is the purpose is provisional entries or payable entries. What it means, provisional entries or payable entries means, suppose rent amount I need to pay next month, but it should affect in this month. 31st May it should affect, but I'm doing payment in the next month. For those options we are going to use reversal entry. Understood?
Yeah.
But that situation will not happen for invoices. Why we need to do invoice reversal?
Okay.
The business
so that's the
logic.
reason the option is not there. Okay.
Yeah, business logic is required for in general ledger transactions only.
Okay, got it.
Okay, fine. So I'm deleting this one. I don't want to like mix this one. I'm making fine. Let me go back. Now, is it clear for all this foreign currency revaluation? Whenever you are executing foreign currency revaluation, it is most important. So, if you are for a junior people, for new people, if you are not able to follow, leave it. You need to remember this is standard cost method, and this is the date, and you need to enter, and you need to select posting. That's it. So, if you are able to understand the entire this is 6 drop downs, well and good. If you are not able to follow, at least you need to understand this one. That is enough. And these dates, anyhow, you know dates and this one. Okay, particularly for junior people, I know like they don't know about ERP, they don't know anything. People are joined, so for them it is a little bit complex to their mindset. So you can use this if you understand these two and this one. That is more enough. That's it. Okay, fine. Any more questions, team? Anyone? Okay, fine. Now we understood about foreign currency revaluation in AP and AR, both are same. I mean to say the behavior of the calculation process, foreign currency revaluation process for the AP and AR, both are same. Both are same. Next. Now, foreign currency revaluation. Foreign currency revaluation in GL and cash and bank are different. Means this behavior is different and this behavior is different. Means GL and cash and bank similar, the logic is similar. The logic is similar, but what is this? Let me explain you. What is this? Let me explain you. I'm taking this example. Now it is not vendor invoice, it is for one ledger account. Suppose 210300 210300 I have entered some currency 1000 GBP. This is debit posted. It is for main account 1000 GBP posted. On 5th of January it was posted, like otherwise credit it was posted, liability credit posted, this one. Now it is 1200 US dollars. Okay, now on 31st January it was exchange rate is there, it is 1.24. Then the difference between 1200 versus 1240, difference 1240 was posted. Now 1.19 on 28th February it is 1.19. Then 1190 I need to post. So this will not be there in the system. The logic will not execute this one. So the profit or gain, it is 50 will be posted. The difference $50 will be posted to this account. And now 1.17. Now the difference between these two is 20. It will be posted $20.
That means here in the GL, the logic is that it goes by the cumulative approach.
Yes. Okay. So that is actually there is some word I did not remember that one. I will verify that I will tell you the logic. So now the terminology, the naming given some terminology. So here it is not reversing the previous month transaction. It is considering the difference between the last versus this one. Correct. The last transaction versus current transaction. It is not referring to this one at all. Got it?
Then in that case, all these entries are going to be the standard entries, not reversible entries.
Yeah, it is not going to be reversal. Actually, I plan to explain these things, but it is not covered because so many doubts. No problem. I'm very happy because people are asking many questions. So I will give more explanations about the issues, whatever you are facing, but then I will continue the session. So today's session is not progressed much because of so many doubts, but that is okay for me. I'm very happy to give clarifications first and then explanations. Okay, this explanation tomorrow I will cover in detail about this foreign currency valuation. Okay, and I'm stopping here for today. We'll connect once again tomorrow morning, 7 a.m. IST. Any quick questions, please unmute, you can ask me.
This cumulative approach, once again, you need to explain. Because not yet.
Sorry, come again.
This cumulative, whatever you hear, profit 50, 40, 20.
Yeah, we'll discuss. I need to explain you. Tomorrow I will cover.
Okay.
So simply the exchange rate, current exchange rate versus previous exchange rate. So whenever we are posting here, it is not looking at the original transaction. It is looking at the previous 40. Now it is 1.24 versus 1.19. So 40 already posted, and now it will be posted to the difference, like 1240 now, and now 1190. The difference is 50 will be posted, and here
Okay.
117, 119. The difference is 20 was posted. That's it. Okay. Clear explanation. I will explain you tomorrow. Yes, please. Any more questions? Nothing. Then for today, we'll once again tomorrow morning, same time. See you all. Bye bye.
Yeah, bye.
Bye.